Bitfarms Ltd is currently trading at $4.20 per share, which is an increase of 3 cents or 0.72% for the day. Now, the immediate reaction for most people looking at a Bitcoin miner like Bitfarms is to instantly check the price of Bitcoin itself. The general belief, the expectation, is that this stock is just a simple, leveraged instrument tied to the whims of the digital currency market. When Bitcoin rallies, Bitfarms should soar. When Bitcoin corrects, Bitfarms should fall even harder. And while there's a kernel of truth to that, focusing solely on that connection is a dangerous oversimplification and misses the entire high-stakes corporate drama that is the real driver behind this stock's valuation and volatility right now. The reality is that the future of Bitfarms is currently being decided not by crypto charts, but in boardrooms, through press releases, and by the strategic maneuvering of a much larger industry predator. For many individuals engaging in online investing for the first time, perhaps through a user-friendly platform like the Robinhood app or SoFi Invest, crypto mining stocks appear to be an easy way to get exposure to the sector without directly owning the underlying assets. It feels like a tangible business, something more familiar than a private key. The expectation is that you pick a miner, and if your thesis on Bitcoin is correct, your investment will pay off handsomely. This is the narrative that pulls a lot of capital into names like Bitfarms. However, this perspective completely ignores the brutal operational realities and the intense competitive landscape of the mining industry, a landscape that has just put Bitfarms squarely in the crosshairs. The reality is that this company is in the midst of a hostile takeover attempt by its larger rival, Riot Platforms. This single fact changes everything. It reframes every price tick, every volume spike, not as a reaction to Bitcoin, but as a vote of confidence, or lack thereof, in one of two outcomes: a forced acquisition or a defiant, independent future. Let's break down what is actually happening. Riot Platforms recently disclosed a significant stake in Bitfarms and has made a public unsolicited proposal to acquire all outstanding shares. Riot's proposition was to buy Bitfarms for a combination of cash and Riot stock, a deal that valued the company at a premium at the time of the offer. Bitfarms management promptly rejected the offer, claiming it significantly undervalued the company and its growth prospects. In response to what it perceived as a hostile move, the Bitfarms board adopted a shareholder rights plan, colloquially known as a poison pill. This is a defensive tactic designed to make a hostile takeover prohibitively expensive or dilutive for the acquirer. It essentially allows existing shareholders, excluding the acquirer, to purchase additional shares at a discount if one entity accumulates a certain percentage of the stock, in this case 15%. This corporate action is the central tension driving the stock. The daily price movement is less about Bitcoin stability and more about Wall Street's calculation of the odds. Will Riot increase its bid? Will another suitor emerge? Or will Bitfarms management successfully convince shareholders that their standalone plan will create more value in the long run? The volume we are seeing is not just from retail traders using their Fidelity mobile app, it's also arbitrage funds and institutional players on platforms like Interactive Brokers, placing calculated bets on the outcome of this corporate battle. The expectation of a simple ride on crypto's coattails is shattered by the reality of this complex situation. An investor who bought Bitfarms thinking it was a proxy for Bitcoin is now unwillingly a participant in a corporate governance dispute. This is where a deeper understanding of the business is essential. Unlike buying a well-diversified fund through Fidelity ETFs or letting a service like Schwab Intelligent Portfolios manage your risk, an individual brokerage account holding a single stock like this requires constant attention. The performance of Bitfarms isn't just about the Bitcoin price. It's about its operational efficiency, measured in hash rate, and its cost to produce a single Bitcoin. This is especially critical in the wake of the recent Bitcoin halving. The halving cut the block reward for miners in half, effectively doubling the cost of production overnight. Only the most efficient, low-cost miners are positioned to thrive. This is the core of Bitfarms' argument for a higher valuation. The company has been aggressively expanding its operations, particularly in locations with low-cost energy like Quebec, Canada, and more recently Paraguay. Their stated goal is to dramatically increase their hash rate, the computational power of their network, to over 21 exahashes per second EHS by the end of the year. Management argues that Riot's offer doesn't properly account for this aggressive expansion plan and the value it will create. They are essentially telling shareholders that the reality of their future performance will far exceed the market's current expectation, as reflected in Riot's bid. Let's look at the company itself, beyond the takeover drama. Bitfarms is a global Bitcoin self-mining company with a diversified portfolio of mining facilities across Canada, the United States, Argentina, and Paraguay. This geographic diversification is a key risk mitigation strategy, protecting it from regulatory changes or energy grid issues in any single jurisdiction. Their business model is straightforward. They use specialized computers, ASICs, to solve complex mathematical problems to validate transactions on the Bitcoin blockchain. In return for this service, they receive new Bitcoin as a reward. The profitability of this operation hinges on two main variables: the price of Bitcoin and the cost of electricity. This is why their new 100-megawatt site in Iguazu, Paraguay, powered by low-cost hydropower, is so significant. In a post-halving world, a miner's ability to secure cheap, reliable power is its bloodline. The market's simple expectation is that all miners are the same, but the reality is a stark divide between those with high energy costs who are struggling and those like Bitfarms who have strategically secured low-cost power contracts and are positioned to gain market share. This specific detail is far more important to its long-term viability than whether Bitcoin is up 2% or down 2% on any given day. This kind of specific company analysis is a cornerstone of any sound investment help or self-investing strategy. It's the difference between gambling on a ticker and making an informed decision about a business. Now, let's connect this back to the future outlook and the potential scenarios that could unfold. The first, and perhaps most straightforward scenario, is that Riot Platforms increases its offer to a level that the Bitfarms board cannot refuse, leading to an acquisition. In this case, Bitfarms shareholders would receive cash and Riot stock, and the BITF ticker would cease to exist. The upside for current investors would be capped at the final acquisition price. A second scenario is that Bitfarms successfully fends off the takeover. The poison pill works, and Riot walks away. At this point, the pressure is squarely on Bitfarms management to deliver on their ambitious growth promises. They would need to execute their expansion in Paraguay flawlessly, grow their hash rate as projected, and maintain their low-cost production advantage. If they succeed, and if the price of Bitcoin cooperates, the stock could potentially trade at a much higher valuation than what Riot offered. If they fail, or if the Bitcoin market enters a prolonged downturn, the stock would be incredibly vulnerable, and management would face intense scrutiny from the very shareholders they convinced to reject the buyout. A third, more complex scenario involves another company entering the fray, creating a bidding war for Bitfarms. This could be the best possible outcome for shareholders, as competition would drive the acquisition price higher. Given the takeover drama and the starkly different futures for the company, I am curious what everyone watching thinks is the best path forward. Comment below. Should Bitfarms accept a sweetened offer from Riot, or should they fight to stay independent and execute their own growth strategy? The expectation of passive crypto exposure has collided with the reality of active corporate defense and operational competition. This is why comparing Bitfarms to a more stable blue-chip name like Apple stock, or even a high-growth tech darling like Nvidia stock, is an apples-to-oranges comparison. The risk profile is entirely different. Even comparing it to a volatile but established name like Tesla stock falls short because the existential question of corporate control isn't hanging over Tesla in the same way. When you choose to invest online in a company like Bitfarms, you are not just betting on a commodity price. You're betting on a management team, an operational strategy, and their ability to navigate a very aggressive M&A environment. Platforms offering Fidelity brokerage services or SoFi trading platform access give you the tools, but the strategic analysis is up to you. In summary, the story of Bitfarms is much more compelling than its surface-level identity as a Bitcoin proxy. The common expectation is that its price is a simple function of the crypto market. The deeper reality is that this is a company at a crossroads, fighting for its corporate independence while simultaneously navigating the brutal economics of a post-halving world. The takeover bid from Riot Platforms has forced a referendum on the company's future, transforming it from a simple thematic play into a complex special situation. The outcome will depend not on Bitcoin's daily fluctuations, but on corporate